Good morning, America! Start your day with Christ. Start your day right. Don't end up circling a box like a dummy. No, 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 no. Please do not blow yourself up. Please. Please. Don't kiss a rock. No, no, no. You need to be in Christ, the true Christ, the only begotten Son. The Word became flesh, the truth, the way, and the life. No, no, no. Do not get derailed by fabrications by cave dwellers. No, 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 no. Today we're going to talk about the stock market, stock trading. You know, you gotta figure out how to get the Casherini Mularini in a new world. Just like the Christians came to the new world and took over America, took over the continent, took over the planet in Christ. You gotta learn new ways in this new AI age. It's a new age of robots. But one thing is not going to change. You need the Casherini, Mularini, and you need to get paid. You need to stay ahead of inflation. Hashtag no lie. And that's what we're going to talk about today. I don't know too much. I don't know everything. But I'm going to figure this out. Oh, you best believe I'm going to figure this out. I need to get super duper paid. I seen my business drop like 30 to 40% in the last 2 years. Boy, I mean, it's still okay. You know what I mean? It's still better than most people. It's still better than, you know, a 9 to 5. That's for sure. But, you know, I need to stay ahead of the curve. You know what I mean? Just like 10, 20 years ago, I stayed ahead of the curve. You know what I mean? I'm feeling that heat behind me. I go to the supermarket. I bought two packages of Thomas's, English muffins. I bought 4 tomatoes, 2 onions, and a pepper. That shit was $50. I said, oh no, I need to get a new stream of Casherini Mularini. I need to get my Casherini Mularini up. And one thing I know that is not going to get changed by AI is the stock market. That shit is not going anywhere. Hashtag no lie. Just like McDonald's is not going anywhere. You know what I mean? Just like Walmart is not going anywhere, Amazon is not going anywhere. I mean, there's just certain things that you know. Home Depot is not going anywhere. You need to eat and you need to sleep. You need a house. You know what I'm saying? And houses are like $650,000 now. So, you know what I mean? I looked at a new Chevy truck. That shit was $88,000. I'm like, whoa, 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 whoa. I mean, I'm not into new trucks anyways, but, you know what I mean? $88,000? $88,000 for a new Chevy truck? Relax. Yeah, let's get down to the meat and potatoes. Today we're talking about stock trading, the 3 types of traders, the basics, and the tax brackets that go with them as well. Because we gotta think about, you know, if it's not inflation, it's Uncle Sam. You know what I mean? Especially if you live in a blue state. These niggas is straight commies, trying to rape it, trying to take 40, 50, 60% of your money. Did you hear Mandami? Mandami said, you need to pay us 60% of all your money so we can give it to the homeless. And you know that I'm giving nothing to the homeless. You know what I'm saying? So we could open up free supermarkets. Mamdami, the super socialist communist. That shit is not going to work because anybody with money is just going to leave. Morgan Stanley, JP Morgan Chase, all the big Lehman Brothers, they're all leaving and already left. They're like in Florida right now or in Texas. Anybody with like have a brain is not going to stay. These people, these commies have no brains. They think that they could just tell you to pay a 60% tax rate and you're just going to bend over and just take it with no lube. No, people are just gonna leave, bro. They just go next door to New Jersey, or they go to like Massachusetts, or they go to Connecticut, or they go to New Hampshire. You know what I'm saying? They could just go buy anybody in real estate. All the money in New York, it's in real estate and the stock market. Like, and you don't need to be a genius to figure that one out. You know what I mean? But real estate is not for me. That shit takes way too much time and way too much maintenance and way too much fuckery. I'm just trying to get my money and be out. You know what I mean? And be able to go to the park and go shopping and do what I want. I'm not trying to be, you know what I mean, dealing with fucking Section 8 broke niggas. You know what I mean? And, you know what I mean? I'm not trying to deal with that. You know what I'm saying? I'm not trying to be fixing shit up. Maybe before I was. You know what I mean? But now I'm getting a little bit older and I'm trying to find, you know what I mean, the fastest, easiest, you know what I mean, cheapest way to the Casherini Mullarini. You know what I'm saying? I'm not trying to be putting down fucking 30, 40 grand, you know what I mean, to be dealing with broke ass Mexicans. No more of that. Maybe before, you know what I mean? I'm not trying to fucking maintain a big ass warehouse like I do right now. You know what I'm saying? I'm not trying to do that forever. I'm trying to work 2 hours, get my 10, 20 grand and be out per day. Hashtag no lie. Every single day. Hashtag no lie. This needs a remix. Honduras, Puerto Rico, Mexico, El Salvador, Colombia, Costa Rica. You better have your papers or you're getting deported. Hashtag no lie. Remix. Let's get down to it. That's a long ass 7-minute intro. You got 3 types of traders. You got day traders. You got swing traders. You got long-term traders. You know what I mean? There's a lot of little details that go in between all these categories, but you want to break shit down. The first thing you want to do in any type of business, any type of venture, any type of Casherini Mullarini hunting, is you want to break shit down to the basics, right? You want to simplify a thing, whether you're doing stocks or you're doing real estate or retail or wholesale or, you know what I mean, anything, entertainment. It doesn't really matter what kind of business it is. You want to break it down and simplify it to the basics. You know what I'm saying? So you understand, so you have some type of simple plan. So, here are the 3 types of traders. Day traders, swing traders, and long-term traders. And here are the 3 types of products that you're trying to make money on. You got stocks and indexes, right? Which are basically the same. Indexes are just, you know, a conglomerate, a group of a lot of other stocks put together into one group, and stocks are just individual, right? Then you got futures, which, you know, in simplest terms, it's basically betting, right? But it's not gambling. This is not gambling. And that's something that, you know, I mentioned in other stock videos that I've done that nobody has watched, right? But I always mention in every single stock trading video, I'm going to mention, this is not gambling. This is not FanDuel. This is not DraftKings. This is not Atlantic City or Vegas. You need to remove the gambling from your mind and remove all the gambling apps that might trigger your gambling while you're stock trading. Gambling and stock trading do not mix together, right? But futures. In futures, you're buying a contract to trade the asset, to trade the stock, but you do not own the stock. You're not buying the stock. You're buying a contract that allows you, that gives you stocks for a limited time, usually 1 day. There are other contracts that are for 30 days or for 1 week, but the most contracts, the most popular contracts that people use are just 1 day, right? But this contract allows you leverage. Basically, for like $500, you're getting $15,000 to $20,000 worth of an asset to trade. You do not own that asset. I know this might become a little complicated, but you know, you need to follow along. You know, you might have to, you know, watch these videos over and over and over and over and over to get them, right? To get it. Because the most money is in futures, okay? We're going to get back to that in a minute, but Basically, futures is you're risking, right? They say risking. In like the industry, they say risking. They don't say betting. But it's basically kind of like the same thing. You're given a certain amount of stocks, right? They usually have a lot of leverage. You're putting a $500 down, collateral. You're not buying $500 of stock. You're buying the contract for $500, and you're getting $15,000 to $20,000 worth of stock to trade, right? For one day. Now you're basically betting if that stock could go up or could go down, and that's what you're buying. You know what I mean? When you buy a call, basically a call is expecting it to go up, or you buy a put that is expecting it to go down. That is what you're buying. You're buying that bet. You're not buying the stock, right? Now, when your leverage is $15,000 to $20,000, you could easily lose $1,000 like that in like seconds. So you better plan your shit out, and you need to know what you're doing. Now, futures makes you the most money in the fastest amount of time, but it's also the most complicated, because you need to understand the contracts, you need to understand the timing, you need to understand the margin, you need to understand the leverage, you need to, you know what I mean, you need to be really have a serious risk management system, a serious plan. You know what I mean? A stock is different. When you buy a stock, if it goes up or it goes down, you know what I mean, you still own the stock. You could just wait it out. In futures, you only got one day. Most contracts are one day. The most valuable contracts, the ones that make you the most money, are one day. So you need to plan that out real quick. Plus, you need to have a larger margin. You know what I mean? When you buy on a stock, you need to just have the money to buy that one stock, right? Let's say the stock is $200. You're buying that stock. That stock could go down to $150, or it could go up to $350, right? But you still own that stock. You could just, if it doesn't go up the same day, you could wait 2 days, 3 days, 40 days, 50 days, 2 years. You still own that stock. And the same with indexes, right? But with futures, you have a limited amount of time on that contract. You know what I mean? If you make a call that it's going to go up, or you make a put that it goes down, and it goes the opposite, you're losing your $500 plus more in one day, okay? But when you make a call and it does go up, you have a leverage of $15,000 to $20,000, not $500, not one stock for $160 or $200. You have a leverage of $15,000 to $20,000. You know what I mean? So when it goes up according to that ratio, according to that $15,000, $20,000, stock. So you could easily make $3,000, $4,000, $5,000, $6,000 like that in 15 minutes. You know what I mean? If it goes up and up. Or in 30 minutes. You have one day. You have till 4 o'clock. Not even the one day. You have till 4 o'clock that afternoon. You know what I mean? You have from 9 o'clock to 4 o'clock. It's not even 24 hours. It's from when the time the market opens to the time the market closes. Now, if you want to hold that position, you can hold that position, but that gets a little bit more complicated, and you need a whole lot of more money to back you up overnight. But most people do it one day. Now, futures is the most complicated, right? It's the most complex. It also has the most risk. You could lose the most money. But the upside is that you can make the most money in the fastest amount of time. So, you know what I mean? I'm going to learn my futures. Hashtag no lie. Let's carry on, okay? So now you understand that stocks is owning the stock. Futures is betting on a contract that allows you to use a whole lot of stock, like 15 to 20 grand worth of stock. But you need to be out by 4 o'clock, okay? They're completely different, all right? You don't own the stock. You're just using the stock for that day. But you're not buying one stock. For example, if you were to use your own money to hold that, to be able to make that type of money, you would have to buy 15 to 20 grand out of your own pocket in that morning. You know what I'm saying? You could do that as well and you could hold that money, and you don't lose that money. You don't have that risk. But most people don't want to put up that much money, right? But you could do that as well. You could just, buy it yourself. With futures, you're not buying it. You're just allowed to use it for that one day. But you're able to reap the rewards You know what I mean? If it works in your favor. And you're also able to lose. You know what I mean? You get the benefit and the risk without putting the money out of your own pocket, basically. Right? Now let's go on to crypto. Crypto, in my opinion, I put it up there because it's popular, right? But crypto is not stocks. Not at all. A stock is a part of a real company, like Coca-Cola, like Walmart, Home Depot. These are real physical companies, real things, okay? That, you know, they're not going to go away. You know, especially if it's like a long-term brand that's been around for a while, right? Crypto is not. Crypto is a digital asset, a coin, right? You got Bitcoin being the biggest one, Ethereum, right? Cardano, Solana. Then you got all the altcoins, right? XRP, and you know what I mean, and now you got Hype, and I mean the list just never goes on and on, and it just never ends, right? But these are digital assets. They call them assets, but they don't have any cash flow. For example, Bitcoin does not sell anything. Coca-Cola sells something. Walmart sells something. They have cash flow. They have revenue from customers that are not investors. You know what I'm saying? Coca-Cola makes their money from selling Coca-Cola to random people. They don't make money. I mean, they do make money from the stock market, but they don't. It's not like they're bread and butter. You know what I mean? That's just like a side business, like a side deal. Their main money comes from products and services, right? Like Home Depot, like Walmart, like Apple, like any other company, like Google, right? Crypto is not like that. Crypto, the price of crypto, whether it's Bitcoin or Ethereum or Solana, Cardano, whatever it may be, the price of Bitcoin only goes up when you buy crypto. You're not buying a product. You're not buying a service. You're not buying a can of Coca-Cola, a Big Mac. You know what I mean? 2x4s at Home Depot. You're putting in money into that coin. And when you pull your money out of that coin and you sell that coin, the price goes down, obviously, right? That's why crypto has crashed in the last week or so, while the stock market is skyrocketing. And you have all these people on the Twitters, you know what I mean, with suicidal tendencies because they've lost 50 grand, 80 grand. I saw some guy that said he lost $220,000 and his wife is going to leave him. Crypto is easier to manipulate. Crypto is on a blockchain. It's all digital, right? Crypto has no CEO. Crypto has no, there's nothing, there's nobody in charge, right? Crypto is a lot closer to gambling because stocks are a part of a company. A futures contract is a futures contract. You know what you're getting into, right? You need to understand it though. It's not their fault if you don't understand it, right? But crypto is not like that at all. Crypto has no manager. Crypto has no product. Crypto has no services. I'm not a big fan of crypto. I'm not going to be doing crypto unless it's like big time in my favor. You know what I mean? Like for example, in the last 30 to 40 days, Bitcoin has dropped from like 80 grand to 70 grand to 60 grand. Every time I go to Twitter, the shit has dropped another $1,000 and another $1,000. Now, if that shit drops to $35,000, that's an opportunity right there. I don't have to like crypto to see the upside there. You know what I mean? If it drops to like $35,000, I'm getting me some crypto. Now, I'm not holding crypto. I'm not gonna be like these crypto dummies and be like, oh, hold. They lost all their money. All these people that complain about losing their money, they lost all their money because they held on too long. I'm not into holding stocks. I'm not into holding futures. I'm not into holding shit by my fucking dick. You know what I mean? And walking away with money in my pocket. You know what I mean? That's why I'm going to learn my day trading. And I'm going to also learn my swing trades. Swing trades are like, anything that's longer than a day. Something that's a week or a month or longer. Long term is anything that's over, you know what I mean? Look at the top part right there. Long term, it's anything that's over 12 months, right? Now you want to combine this, but I'm going to specialize in that day trading. I want to get in, get out. Get in, get my 3 grand, 5 grand, 6 grand, 10 grand, 15 grand, whatever it may be, right? I have a goal of like $10,000 a day. But in the beginning, I'm only going to be getting $150, $200. I'm realistic. I'm not going to, you know what I mean, be risking, you know, too much money when I don't know how to use the platform, right? Once I get a hold of the platform, I know I'm going to be risking $1,000, $2,000, $3,000 to bring back $12,000, $10,000, $8,000 a day. A day, not a month, not a week, a day, per day, right? But I'm also going to have a different account that is set for long term, that I only got to go check that out, you know what I mean, go check that up like, you know, once a week, once every 2 weeks, that it's just there, you know, automated, you know what I mean, like a robot, because you got that technology nowadays. You got technology that automatically, you know what I mean, gets opportunities, reads the charts, and buys and sells things for you, like a robot. I'm going to have, but that's going to be for long term. You know what I mean? That's going to be, you know, long term also makes you the least amount of money. You see, just like this is the most difficult, is day trading, this makes you the most money. This is the medium difficulty, swing trading. This makes you medium money. This is the long term. You know what I mean? It's the easiest. That's what most, you know, people invested in the stock market, like 80 to 90% of people do long term, because it has the least amount of risk, but it also makes you the least amount of money, and it takes the longest amount of time. You know what I'm saying? The other list, the stocks, the futures, and the cryptos, is the same thing. Stocks and indexes are the easiest, and they make you the least amount of money, right? Futures are the most difficult and complex, but they make you the most amount of money. We're gonna get down to the tax brackets in a way, in the bottom. It also is the same way. Well, long term makes you the least amount of money, but has the best taxes. So this is a little different here. Futures is the most complex, but makes you the most money in the fastest time, and the tax benefits are 60-40, are the best tax benefits. Crypto, I just put it up there because, you know, it's gonna be on all the exchanges nowadays. It's popular, you cannot deny it. You know what I mean? But I'm not into crypto. I'm not into crypto unless it's like a 80-90% chance. Unless the odds are really, really in my favor. Like I said before, I'm not buying Bitcoin at like 60, 70, 80 grand. For it to go up to what? 85? It's been like about 80 for like the last 3 years. You know what I'm saying? It's not like stocks where they go up. It's not like Tesla. It's not like Apple. It's not like Google. It's not like, you know what I mean, Microsoft, where you get your wins within a couple months. You know what I'm saying? Or even a day. It's not like the S&P 500. It's not like the Dow Jones. It's not like the NASDAQ, where you're getting, if you know what you're doing, you're walking away from that thing with $3,000, $4,000 in a day. You know what I mean? Crypto is not like that. So unless the odds are drastically in my favor, like if that shit drops to $25,000, it don't really matter if it takes another 6 months or a year. I know it's gonna go back up to 50,000, because it's not trying to go back to 100,000. I'm not expecting it to go back to 100,000. I'm expecting it to go back to just 50,000. You know what I'm saying? That's reasonable. Now, when odds are like that in my favor, yeah. You know what I mean? I might just throw 10 grand into crypto and just let it sit there for like a year. You know what I mean? Because I know it's going to go back to 50,000 if it's at 25. That's a whole different story than if it's at, right now it's like 60. I'm not buying that shit at 60. I'm not buying that shit at 70,000. For what? For it to drop in the next year or so, like it's done right now? Those people that were holding it, you know what I mean? That bought it at like 60 and were holding it to 80, and like a year ago it was like 80, and now it dropped all the way back to 60, and now it's dropping to 50, and now and those people are like upset because it just held down for too long. I'm not trying to do that. I'm not trying to hold crypto for more than a year. You know what I'm saying? That you know, you hear those stories of people that just held crypto. Oh, well, if you bought crypto 17 years ago, you would be a multi-billionaire. You're talking about 17 years ago. That shit is not realistic. That's never ever been my strategy. It's never going to be my strategy. Good for them. I'm happy for those people that bought a crypto for $3 and now it's worth, you know, $30 million. I'm happy for them. But that was 17 years ago. That's not me. I didn't even know about crypto 17 years ago. You know what I'm saying? That's not a realistic That doesn't make any sense for the average person. You know what I mean? But they feed you with these stories and this nonsense that just brainwashes you. Whatever, let's move on, okay? Crypto is like, unless the odds are like 80-90% wins, that shit's not for me. You know what I'm saying? I'm into my real stocks because it's too, the problem with crypto is that it's too unpredictable. You know what I mean? Coca-Cola, Lockheed Martin, you know what I mean? Gun manufacturers, you know what I'm saying? Pharmaceuticals, Johnson & Johnson, Walmart, Home Depot, Apple. These are predictable markets. People are going to continue, you know what I mean? AI or not, people are going to be using phones. People are going to be eating. People got to sleep. People, you know what I mean? People need to build houses, you know what I'm saying? Like, crypto doesn't have any products or services. Just that mere fact makes it very, very unpredictable and possibly unproductive. And, you know what I mean? And that is not good for my Casherini Mullarini. You know what I'm saying? It's just common sense, but, you know, I already have a background in business. So I know it. Basically, what I need to do is just gain new skills, but the basics of a business will always be the same. Now, let's move on real quick to the tax brackets. I know this video is kind of long, but these things are important to explain, right? The Casherini Mullarini, you got to talk about what's coming in, right? And what's going out. That's the point of this video. The 3 types of traders, right? I mean, the most money with the most risk. And also the most complex, you need to understand that. The most learning, you know what I mean? Just like a regular children's doctor is not like a surgeon. A regular children's doctor might be making $150,000 a year. A surgeon, a heart surgeon, you know what I mean, has to go to school for like another 8 years. You know what I mean? And he's making like $300,000, $400,000 a year, right? So it's important to understand the different categories, right? And how to mix them in and which one, you know, not everyone has the same skills. Not everyone, you know, has the same capacities. You need to humble yourself and understand what category works for you. You know what I mean? Not everyone has the same amount of time. Not everyone has the same amount of energy. Not everyone has the same amount of brains. Not everyone has the same amount of, you know what I mean? Everybody's situation is different. So maybe, you know, long term or swing trading that require less time, make you less money, but require less time. Maybe that's better for you. You know what I'm saying? Day trading requires you to wake up mad early. Requires mad more research. It also makes you more money, but you have to be at the computer at like 8:30 in the morning every single day. You know what I'm saying? You can't be at a job. You know what I mean? This is, you know, I mean, and there's different ways to do your day trading, slightly different. You know what I mean? But you really kind of, if you want that real Casherini Mullarini, you gotta be there at 8 o'clock in the morning. You gotta have those charts open live at 8 o'clock in the morning. You know what I'm saying? And you need to understand your futures. It's more complex. But you know, that's where you get your 10, 20 grand a day, 5 grand a day, 4 grand a day. Not a week, not a month, a day. Okay, so now the tax brackets, right? You got long term, you got short term, right? You got long term, medium term, and short term, right? Long term, right, makes the least amount of money and obviously has the least amount of tax, right? You see where anything under $49,000 is 0%. Anything over $15,000, your capital gains, you know how much profit you make. Anything over $49,000, from $49,000 to $545,000 is $15,000. As long as you held it over 1 year. Now it's difficult unless you're putting down a lot of money. It's difficult to make $545,000 long term. You can make $545,000, but day trading, right? Your short term brackets, your short term, you know, rates are a lot higher. You see how they're anything under $49,000 is $12,000. You know what I mean? From $49,000 to $200,000 is $24,000, and anything over $200,000 is $32,000. That's a lot of money right there. And this applies to stocks, indexes. We're back up here, right? These brackets, all these the short term, and the long term. These apply to stocks, indexes, and crypto, but they do not apply to futures. The one that makes you the most money, and the one that makes you the most money, and the one that is the most complex, and the one that has the most risk, and the one that has the most money, right? Futures it doesn't fit in these things are not. Well, these things do apply, but it's split 60-40. These rates here are for 100%. 100% of your long-term gains or 100% of your short-term gains. Futures are split 60-40, where 60% of your gains are taxed as long-term. You see, at that 0% for 49,000 and 15% between 49 to 545. You see how this is a big difference between 15% and 24% here? And 24% is only at up to 200,000. After you go over 200,000, it becomes 32. You see that 32 at the bottom? You know what I mean? 32%. It's a big difference between 32% and 15%, right? And 60% of your gains under $49,000 are in your pocket because they're taxed as long term, even though futures is day trading. The futures are like a real tricky situation over here because they make you the most money with the best tax brackets, with the most risk, with the most money. It's a complex deal, but overall, it's where the most money is at. You know what I'm saying? It's also the most complex. It's also, you need to really understand this. You're not even buying contracts. You're renting, you're leasing the contract for $500 and up. You know what I mean? But you could lose a whole lot more than $500. People think that the limit that you could lose is just $500. It's not. No. You could lose a lot more. You could lose thousands of dollars, depending on, you know what I mean, on how that stock, what index. Also, futures, you're betting, right, or risking on the index funds, right? And the index funds, the S&P 500, the Dow Jones, the NASDAQ, they're graded by points. You know, you'll see the S&P 500. Let's see what the S&P 500 is right now. S&P 500 today. The S&P 500 today. Finish off the video with something, you know. Oh no, it's Saturday. There is no S&P 500 today. There is no S&P. It's only Monday to Friday. But you see the S&P 500. It's at $7,431. But it's not dollars. These are points. Okay. And every point, depending on your contract, every point is worth $50 or it's worth $5. You need to understand the contracts. There's two types of contracts, right? For your futures, which are $50 contracts or $5 contracts. They're really $500 contracts, right? But what you're risking per point, meaning if the chart goes up 1 point, it's up $50, right? This is 7,000 points. 7,000 points, not $7,000. 7,000 points times each point. Each point of the 7,000 is $50. So you can multiply that. 7,000 times 50. You see, these things they sound a little complex, and it sounded really, really complex and complicated to me at first, but I started, you know what I mean? I'm like, I'm going to understand this. I started reading my articles. I started going to the platforms. I started, you know what I mean, reading all the details. They explain it to you. You know what I'm saying? And I started reading, and, you know, I started to get it. You know what I'm saying? And then you have micro contracts. Micro contracts are the same thing, but just reduced. Instead of $50, right? It's $5 per point. And that's for, like, you know, beginners. That's where I'm gonna begin. I'm gonna begin, you know what I mean, risking $5 per point. And your contract is $50 for the $5 points, right? The collateral that you have to put up front, the price of the contract. And for the regular one is $500 collateral, right? What you're paying for the contract. And $50 a point. So you see there's a big difference there from $50 and $5 to $500 and $50. You know what I'm saying? But, you know what I mean? That might, you know, I'm going to start with stocks. I'm going to start here. I'm going to start long term. And, you know, my goal is to end up day trading futures for the big bucks. You know what I'm saying? But I'm not going to start, I'm studying this, no doubt. I'm going, because I know that's my long-term goal. I'm studying that. But my goal is, damn, what's up with the light? I think the light just disappeared on me. Hold on, people. So, but I'm going to start with the long term and the swing trading. I'm going to start down here with the least amount of risk. You know what I mean? Where all I do is just buy the stock and wait. You know what I'm saying? I don't lose my money. You don't lose your money in stocks unless you're buying like stocks that you don't know anything about. Because it might go down, but Apple might go down what, $50, $100? It might even go down $200. But you know that sooner or later, probably within 6 months, it's gonna go right back up. You know what I mean? It's not going. Your money is not gonna disappear. You own a piece of that company. As long as Apple makes phones, you know what I mean, upgrades their systems, you know what I'm saying, which they always do, you know what I mean, for like the last 30 years, right? The money's gonna be there, and it's gonna go up. You might have to wait, you know what I'm saying? But I'm gonna start with my long term. I'm gonna start my swing trade. I mean, another thing that I do is that I get I found all these websites, right? Let me take these things off. I found all these websites and I started studying the website. I signed up to the websites, you know what I mean? And I have my list. You know what I mean? I started studying different industries. You see how you got different industries, you know what I mean? Look. You got different industries, and I started realizing, you know, the pharmaceutical industries, there's a whole lot of money in them pharmaceuticals because, you know, drugs are mad expensive, you know what I mean? So companies that sell drugs obviously have a higher revenue than a company that sells tomatoes, you know what I'm saying? So, you know, I started realizing, you know, these look at the market cap, $755 billion, $325 billion, $442 billion. This is the healthcare sector, you know what I'm saying? So I started to notice these things. Different industries are different. You know what I mean? Like, for example, Walmart, you know what I mean? Walmart is a stable stock, but Walmart doesn't have the same revenue or the same margin, right? The percentage of cash flow of like how much profit they make than like Novartis or like Pfizer's or like drug manufacturers, you know what I'm saying? So I started to realize these things. I started to see that, you know, there's growing markets in Singapore. You know, I started to see there's growing markets in Indonesia. I started to study the Chinese market. I started to, you know what I mean? You need to learn. Because I'm out to get money. I'm not out to like fuck around. I need to, and then I started learning that I didn't even know that these things existed. You see how this says industry right there? Look. You see right there how it says industry? Look. Industry by industry. Then you have stock list, your top stocks. You know what I mean? You got comparison tools. You got exchanges. Which exchanges have the most volatility? Because, you know, for long-term gains, you want something that is stable. But if you want some good money, you know, in 1 day, 1 week, or 1 month, you need volatility. Now, with volatility, that means that is going up and down a lot, right? That it's got, also it needs volume. You see, you got profit margins. You see how it says profit margin right there? You need to see how much margin, how much cash flow is this company making money? Because a stock is dependent also not just on how many people buy it, but the company has to be profitable. Nobody's going to buy a stock if the company is going bankrupt, if the company doesn't make any money, right? People buy Walmart stock, Home Depot, because Walmart and Home Depot, McDonald's and Coca-Cola, you know what I mean? Tesla, they're profitable. These are profitable companies. So before you buy a stock, you need to see the profit margins. You need to see the market cap. The market cap means how many people have bought this stock. How much is their stock market worth? $755 billion? Yeah, give me that. You know what I mean? Medical devices. Then you got different categories in the healthcare sector. You have the people who make the drugs. You got the people who make the devices. You know what I mean? You got the people who transport the devices. You know what I mean? You have the information technology. You have the computer systems, the software for them. You have all these different categories, right? And then you start looking at these categories. You open them up, and you start to notice which ones are the best ones. Which ones have the most profit. Look at that. You see, they tell you. All this information is there. So this is not gambling. That's why I say it's not gambling. This requires, hard work, dedication, research. And, it requires, you need to learn things. You know what I'm saying? You need to study. You know what I mean? You want them $2,000, $3,000, $5,000, $10,000 a day. You know what I'm saying? You need to have some fucking type of, you need to use the nougat. You know what I'm saying? You see a profit margin, 8%. Some companies have a 20% profit margin. Some companies have a 2% profit margin. You know what I'm saying? Some companies are new. Some companies are old. All these things matter. All these things matter. And you see the green and the red, but it's not that. It might seem like a lot of things, on a screen, but it's not that crazy. You got a percent change, right? Of how much the stock has gone up and down. Obviously, if a stock went up 2%, that's something attractive to me, right? Because it's not too much, but it's not too little. Now, if a stock went up too much, I'm not trying to buy it at the top because there's no money at the top. How much higher is it going to go? People already invested in here and already made their money in here. You know what I mean? You need something that's cheap. You know what I mean? Just like everything in life. You need to buy cheap and sell high, but you don't want to buy garbage. You don't want to buy garbage that's going to stay cheap. You understand? You want to buy something cheap. You know what I mean? I like things like this that went down a little bit and have a long, like Boston Scientific Corporation. I like things like this that have went down a little bit. You know what I mean? But not too much. Now, if something went down, and I like things that went up. The green means that they went up. I like things that went up, but not too much. I don't want to see like 30%. You know what I mean? Up. 20% up. There's just many of them that look like that, right? But that is too much. I'm too late to the party, basically. I need things that went up a little bit. GE, Healthcare Technology. That's General Electric. You know what I'm saying? General Electric. Let's look that up. That's General Electric. You know what I mean? You see? It's pretty stable. You got, a market cap of $29 billion. You have revenue of $20 billion as well. You have a volume, meaning how many stocks, how many people bought this stock in the last one day. You know what I mean? It gives you 1 day, 5 days, 1 month, right? And this is at 3,000 people. 3 million people. I'm sorry. There's a big difference there. But, then you could go back 5 days, 1 month, year to date. You know what I mean? So this looks attractive, you see? Because that General Electric is stable. General Electric has been around all your life, right? General Electric is not a new Chinese company, you know what I'm saying? You need to understand the company as well. And you see that, in the last year or so, it was up here at $83, okay? And now it has been dropping and dropping and dropping. But General Electric is not crypto. General Electric is dropping, you know what I mean? But it's at $65. You know what I mean? It's not at $5. It's not like at $4. It's not like, you don't know what's going on like crypto. It's just dropping. People are just not... a lot of people are investing in General Electric, but you know what I'm saying? They got a market cap of $29 billion. You know what I mean? It just happens to be on a low right now, this stock, right? And that's where you want to buy. You don't want to buy it at $5 because that's a company that went completely out of business. You know what I'm saying? Depending on the stock. There's some companies that the stock is cheap, but they still have a lot of volume and volatility. It's just a smaller company. Okay, so not because it's $5, but relative. If a stock goes up from $90 to $5 and you never heard of it before, don't put your money in that because you know what I mean. The company's bankrupt. But let's go 3 months. This happens to be on the low. Let's go to 5 years. How's that? You see? That's pretty stable right there. You know what I mean? Now you're trying to buy it on this type of dip over here, or not this tip. This dip is too high for me. That dip is too high for me. This dip over here at $62. Right now it's at $65. That's pretty good because I could wait 6 months or so and it's gonna climb right back up to $92. You know what I mean? It's at $92. It was at $92 in February. That's just a few months ago. From $65 to $92, you're making about $30 or so. You know what I'm saying? And that, you know what I mean, you could make some money there. You could buy 10 stocks. You could invest about $1,000. You know, each stock is $65. You buy 10 of them at $650, and then, you know, in 3 months or so, you come back and you pull out. You know what I mean? With $900, you made $300 profit. That's not bad. You know what I'm saying? It's not a massive risk. The risk is very, very low. Your investment is not that big, and 2-3 months later, you pull out. You can, you know what I mean? You could pull out half, take your 150, or you could pull out everything. You know what I mean? You own the stock, right? Now, futures is not like that. Futures is completely different. Futures allows you to, instead of investing $600, $650 for 10 stocks at $65 a piece, right? Futures allows you $15,000 to $20,000 of that stock. So when you pull out, you're not pulling out $300. You're pulling out $3,000, right? But the risk is also higher because, you know, your position, your investment is higher, you know. So that's your video. I know this video might be long and all, you know what I mean. There's a lot of things that might be complicated, this and that. But rewind the video and you know, not because it's my video, but that's how I learn. I rewind the videos and I rewatch them and I save them in a playlist. I have a playlist right now. I have a playlist for futures. I have a playlist for long-term stocks. I have a playlist for medium stocks. I have a playlist, you know what I mean? I separate my things into categories. And then I go back and I rewatch them. And I might not understand something the first time, but after I watch the video 3 times, I start to understand it. And then I catch little things that the guy says, and I look them up in a different tag. You know what I'm saying? And, you know, I'm like determined to get my Casherini Mularini. And then, you know, just like any business. I've had plenty of different businesses. And I had to learn new things. You know what I mean? Like, but it's way better. Learning new things is way better than a 9-to-5. Let me tell you that. It's way better than dealing with a boss that you don't like. It's way better than, you know what I mean, going to the Walmart and complaining about, you know what I mean, you know, looking at what kind of bread you're going to buy because you're trying to save money. Like, you know what I mean? You want to be frugal, but you want to be able to also buy whatever you want. You know what I mean? And not worry about money. You know what I'm saying? You also want to be able to go to the park and walk around and go eat and out. You know, I'm cheap. I'm just naturally like that. I'm cheap. You know what I'm saying? But it's not something that, like, I dread. It's not something that I worry about. You know what I mean? I don't worry about, you know what I mean, my car insurance. I don't worry about if my car breaks down, I have to go buy another car. I just, boom, go, you know what I mean? Go get another car. 10, 15, 20 grand, whatever it may be. You know what I'm saying? I don't worry about the car note. I don't worry about the phone bill. I don't worry about, you know what I'm saying, I need a new computer. Where's the money for this going to come from? I don't worry about these things because I'm always after the Casherini Mularini. You need to be able to, you need to always stay ahead of inflation. Stay ahead of the curve. You know what I mean? Not blaming Trump or blaming Sleepy Joe or blaming the left or blaming the right. Those are factors, no doubt. Those are factors. You know what I'm saying? But, you know, like, you know, that's not going to help you. You need to focus on you, on your career, on your Casherini, on your Mularini, on your business. You know what I mean? And always have that as number one. My number one focus is not Trump. My number one focus is not the elections. My number one focus is not Muslim yams. You know what I mean? My number one focus is not, you know what I mean, you know, broke niggas. You know what I'm saying? My number one focus is not even boxing. It's not sports. My number one focus is my Casherini Mularini. That's why I always bring it up in all my videos. Sooner or later, you're going to see me say something like Casherini Mularini, carry cash, and all that dumb shit. That's why you always see me nice with, you know what I mean, a nice shirt. You know what I'm saying? Like, you know, all these things play a role. All these things play a role in your success. The first thing you need to do is remove all the gambling. Remove all the apps, all the gambling apps, all the sports gambling apps from your phones. You know what I'm saying? Remove all the dumb shit. You know what I mean? Make a plan on how to reduce your sports. You need to watch less boxing and get more Casherini Mularini. You know what I'm saying? That's why over the years, like, I don't make as many boxing videos. You know what I mean? This is not a focus for me because I don't watch as much boxing. Because over the years, you know, inflation and, you know what I mean, and bullshit, you know what I mean, take more of my time. And I'm always going to choose more money in my personal life over sports. Like, I watch even less NFL. I don't watch. I watch only the NBA finals. Go Knicks. You know what I mean? I don't watch NBA. I don't watch MLB. I barely watch any boxing. You know what I'm saying? Because I have to be more focused on my cash. Life is more expensive. It is what it is. And I'm always going to stay ahead of the curve. Please subscribe, hit the like button, leave a comment, and share. Stay focused, my friends.